Hello and welcome and a very good morning to all of you. I'm Shrishti Sharma and with me is Kanishka Sarkar and you're watching Market Cafe right here on ET Now. This is the show where we take you through all the big stories that we are tracking in today's trading hour as well as which are some of the stocks that you should be watching out for. We'll discuss all of that in detail. But firstly, let's tell you what sort of a global handover we are getting to see for the Indian markets in Kanishka. Let's start with the US markets. Quite a volatile trading session on Friday.
Absolutely. Very volatile. But yes, for today, we're getting a very positive handover. In fact, US stock futures, they moved higher overnight on Sunday as markets look to stage a rebound heading into the Thanksgiving holiday week. Now, Dow futures, they climbed about 200 points, while S&P 500 futures, they rose about 0.6%, whereas the tech-heavy Nasdaq, that gained about 0.8%. Now, remember, markets are closed on Thursday for Thanksgiving and will shut early on Friday as well. Now, this uptick is following Friday's rebound after the New York Fed president signaled that December rate cut is still possible. Even so, major averages remain under pressure for the month as investors rethink the lofty valuations of AI-linked stocks that powered much of the 2025's rally. Last week, the S&P 500 fell about 2%, widening its November drop to 3.5%. The Nasdaq slid about 2.7%, is now down more than 6% this month, whereas the Dow, that lost about 2% and is off nearly 3% month to date. Looking ahead, the final stretch of November may stay bumpy. Trading volumes are expected to thin out, and with a few major catalysts before the Fed's December meeting, that volatility could stick higher. Now, in terms of what to watch out for this week, well, key macro data drops on Tuesday. October retail sales and producer price index, both of these reports will help shape expectations for the Fed's final policy decision this year. So yes, the macro data is what we'll be watching out for, and a very positive handover is what we have from the US as far as the futures are concerned. Srishti.
All right, so that's about the US market, but let's also tell you what sort of cues we are getting from the commodity world. And firstly, with respect to the Brent oil prices and the crude oil prices overall, it's the WTI that sinks to a one-month low on the Ukraine peace hopes. Now, Russia and Ukraine deal prospects are definitely there, and because of that, we have seen a bit of a pressure coming in on the Brent as well as WTI crude oil prices. Now, the crude sanctions are also there. That is something that is definitely weighing heavy on the prices. Now, WTI crude did slide over 5% in the month of November, and so far the crude is set for the fourth straight monthly decline. But along with that, with respect to gold, that is seen to be holding above that $4,000 dollar per ounce mark, and gold edges higher and is seen to be extending strong monthly gains for itself. Now, global data is something that the US markets will be watching out for, and depending on that, maybe we can see sharper moves when it comes to the crude as well as gold prices. But when it comes to the Bitcoin, there too we are seeing quite a volatile move. Bitcoin falls nearly 1% amid the broader slump, and Bitcoin is down actually 23% in the past 4 weeks. So definitely very sharp moves coming in on the cryptos as well.
Absolutely. So that's about Wall Street, crude oil and crypto. But let's move on and get you some more top global stories that we're tracking this morning. First up, US Treasury Secretary Scott Bessent has ruled out recession risks for the US economy despite the record 43-day shutdown that caused an $11 billion permanent hit. He says only rate-sensitive sectors slipped into recession while the broader economy remains resilient. Inflation, he argues, stems from the services sector and should ease with falling energy prices. He has also remained upbeat about 2026, backed by lower rates, fresh tax cuts, and improving home sales.
And the US says it has made major progress on the Russia-Ukraine peace plan after high-stakes talks in Geneva, but key security questions remain unsolved. Now, Secretary of State Marco Rubio says negotiators narrowed the gaps in a 28-point plan backed by Trump, though issues such as NATO's role and security guarantees for Kyiv are still open. Now, European officials have proposed a tougher counter plan that rejects limits on Ukraine's military and pushes back on territorial concessions. Now, Trump has given Zelensky until Thursday to respond, but Washington now says the deadline may slip.
Next up, moving on, COP30 has ended with fragile climate deal pushed through by Brazil, boosting finance and vulnerable nations, but sidestepping any reference to fossil fuels. Brazil acknowledged frustrations but urged unity as the UN climate chief warned the world is still fighting, not winning the climate battle. The EU ultimately let the deal pass despite disagreeing, calling it imperfect but directionally positive.
Canada and India have agreed to restart the talks on a long-stalled trade deal, marking a significant thaw after a diplomatic clash halted negotiations 2 years ago. Now, Prime Minister Mark Carney and Narendra Modi met on the sidelines of the G20 in Johannesburg and relaunched negotiations for a high-ambition CEPA aimed at doubling trade to $50 billion by 2030. Now, both sides also reaffirmed civil nuclear cooperation and explored long-term uranium supply deals.
Moving on, South Africa has closed an unprecedented G20 summit in Johannesburg, marked by a US boycott and a diplomatic snub. President Cyril Ramaphosa rejected a US request to hand over the gavel to a junior embassy official ahead of next year's summit in Florida, instead declaring the meeting closed and passing the presidency to the United States in only name. Despite the tensions, he's hailed the gathering as a victory for multilateralism and global cooperation. Let's listen into his comments.
We do have the capacity to confront and overcome the world's challenges through partnerships across society, and by remembering our common humanity, we can create a more secure, a more just, and a more prosperous world. And together, we can ensure that no one is left behind.
All right, and New York City's Mayor-elect Zoharan Mamdani says he still believes Trump is a fascist. Now, even after a surprisingly cordial White House meeting, the two who have traded sharp attacks for the months pledged to work together on affordability issues affecting New Yorkers. Now, Trump, who once called Mamdani 100% communist, lunatic, and even suggested to be deported, diffused tensions when asked about the fascism remark, telling Mamdani to just say it. Mamdani later said the meeting was frank but productive, while the White House insisted Trump is willing to work with anyone focused on improving Americans' lives.
After President Trump said that, I said yes. And
so you do.
And that's something that I've said in the past. I say it today. And I think what I appreciated about the conversation that I had with the president was that we were not shy about the places of disagreement about the politics that has brought us to this moment. And we also wanted to focus on what it could look like to deliver on a shared analysis of an affordability crisis for New Yorkers. Everything that I've said in the past, I continue to believe. And that's the thing that I think is important in our politics, is that we don't shy away from where we have disagreements, but we understand what it is that brings us to that table. Because I'm not coming into the Oval Office to make a point or make a stand. I'm coming in there to deliver for New Yorkers.
All right, moving on and shifting focus to Asia. Now, Japan's defense minister says that Tokyo remains on track to deploy medium-range missiles to an island just 110 kilometers from Taiwan. This is despite rising tensions with China. Now, visiting the base for the first time, he argued that the deployment strengthens deterrence and does not escalate tensions, as Beijing claims. Now, the move is part of Japan's wider military build-up across its southern island chain amid fears of a Taiwan conflict.
And Italy has clinched a historic third straight Davis Cup title, defeating Spain 2-1 in Bologna, and Metti Bertini and Flavio Cobolli delivered in an absence of star Jannik Sinner. Now, Bertini powered past Pablo Busta in straight sets before Cobolli staged a dramatic comeback against Jomi Munar to secure Italy's fourth Davis Cup crown. Now, the win makes Italy the first nation to claim 3 consecutive titles since 1971.
All right, moving on. Indian Pickleball League is gearing up for a blockbuster debut season. At a star-studded event held in Mumbai, the league added its 6th franchisee team. Now, the inaugural season of IPBL will bring together top Indian and international players, franchisee-owned city teams and millions of fans. Now, let's take a look at this very special report. Sharma. Time now to take a look at how the Asia Pacific markets have opened up. And Asia Pacific markets largely started on a high note after the New York Federal Reserve President signaled that a third rate cut could happen this year. Now, let's take a look at how each of the indices are faring. China's Shanghai Index up about 0.1% at the 3,840 odd level. Hong Kong's Hang Seng Index, that's also trading more than 1% higher right now, above that 25,480 level. In fact, just touching for 25,490. On the other hand, Japan's Nikkei, it closed about 2.5% lower on Friday, but today the markets are closed for a public holiday. So yes, that's about Japan's Nikkei. If we talk about ASX 200, Australia's index, that's also trading in the green, up about 1% right now at that 8,500 level. So yes, those are the levels to watch out for. If you talk about South Korea's Kospi index, that's also trading pretty strong, up more than 1% right now at the 3,899 level. So yes, pretty much a positive sentiment across the board as far as the Asian indices are concerned. If you talk about Nifty, we did manage to close just above that 26,000 level. And for the day, we are expecting a positive start. 75 points of uptick is what the Nifty implied open is suggesting. So yes, Srishti, looks like we're headed for a positive start, tracking those Asian as well as Wall Street gains.
All right, yeah, that's about the Asia as well as the handover that we are getting to see for the Indian equities. But for this, let's also tell you which are some of the stocks that we should be watching out for in today's trading session. Firstly, let's start with select pharma counters wherein US FDA action is to be seen, where Natco Pharma is one of the counters that we will be watching out for in today's trading session, as there was an inspection for Natco Pharma in one of their key facilities, that is Manali, wherein for Natco Pharma, there has been a Form 483 that has been issued with 7 observations, and that number is indeed big coming in from Natco Pharma. This particular inspection was done between 21st of November, that actually ended on 21st of November. So we will be watching out for this particular counter. Shilpa Medicare, another negative news flow from this particular counter, wherein US FDA has inspected one of their Unit 4 facility of Jetcherla, and this particular overall inspection has been completed with 8 observations, and definitely here as well a Form 483 has been issued, so let's watch out for that. HG Infra did come out with announcement, a positive news flow out there, wherein one of their JVs with Kalpataru project has been declared the L1 bidder for 1,415 crores of EPC project, and indeed positive news flow coming in for HG Infra, so let's watch out for this one. Tata Chemicals will be in focus on the back of their capex announcement, where the board has approved a capex worth of 910 crores, so let's watch out for that. And lastly, within the banking space, Kotak Mahindra Bank will be in focus as well, because the board has definitely approved every one share to be split into 5, and indeed a reaction of that is something that we will be watching out for. The news did come back on Friday during the market hours, but definitely we can expect to see continued momentum on Kotak Mahindra Bank going ahead.
All right, but lots of other stocks as well that we must watch out for. And the biggest news that we're tracking this morning is the new labor codes. Now, the 4 new labor codes, they've become effective November 21st, consolidating about 29 central labor laws to simplify compliance for businesses. And a lot of these rules, the new rules that have become effective as of November 21st, they are going to be affecting a lot of companies, including the likes of Eternal and Swiggy. In the healthcare space, it's going to be Star Health, LIC, ICICI Lombard, where these rules are going to have an impact. So yes, we'll be watching out for all of these stocks. Other than that, Dr. Lal Path Labs, Metropolis, Thyrocare, these are also some of the counters that are likely to see some impact on the back of these labor codes that have been implemented and have mandated higher wages. It was new higher standard definition of wages that will impact PF and gratuity contributions. So yes, watching out for clarity on these rules as well as how they are going to impact these companies and the stock reaction. Other than that, we have TCS, which is going to be in focus today. It's because a US court has upheld $194 million worth of damages in DXC trade secrets case. So yes, a negative news flow as far as TCS is concerned. Let's watch out for how that stock reacts. Other than that, lastly, we have Indigo, which is going to be in focus because the company has announced its plans to invest $820 million in an arm for an aircraft acquisition. So watching out for that. Other than that, it's also going to be included in Sensex. So yes, watching out for how Indigo reacts to all of these developments. So yes, lots of stocks to react on the back of news flows, Srishti.
Indeed, but with this, let's move on to another news flow where the government has listed Insurance Amendment Bill, Securities Market Code among key bills for the winter session of Parliament, which begins on December 1st. Now, the government has called for an all-party meeting on November 30th to build the consensus and ensure the smooth operation of the winter session of Parliament, which is set to begin on December 1st, like we told you. But what are some of the more details that are likely, some of the newer bills that are likely to be tabled? Let me take it across to my colleague Prakash, who is joining us with more details. Prakash.
Well, the winter session of Parliament is going to be commenced from December 1 and will continue till December 19, where some crucial bills are likely to be tabled. In fact, the government has given final shape to the business list for the winter session of Parliament, where the Insurance Amendment Bill 2025 has been included, which is expected to bring sweeping changes in the insurance sector by introducing some key reform measures. In fact, the bill will also play a very crucial role in achieving 100% insurance coverage target going forward. And therefore, the winter session will play a very crucial role from the business standpoint. Some other key bills such as the Atomic Energy Bill, the Higher Education Bill 2025, and the Securities Market Code Bill are also part of the business list. In addition to that, the Constitution 113th Amendment Bill 2025 and the Government of Indian Territories Amendment Bill 2025 may also be considered by the Parliament. This session is expected to be very stormy on the back of multiple political developments that have taken place, including SII issue, which is being conducted in various states. Opposition parties are likely to rake up this issue in the Parliament. In fact, the session is happening in the backdrop of Bihar Assembly elections outcomes, and therefore opposition parties are likely to raise this issue, and that will be very interesting to see as to how government is going to manage the floor of the House.
All right, so that's all about Parliament's winter session agenda. But moving on, the road to a perfect Bharat NCAP 5.0 safety score is about to get much steeper for Indian automakers. Now, the Ministry of Road Transport and Highways has unveiled the draft for the next phase of vehicle testing, that is Bharat NCAP 2.0, and it signals a major shift in safety standards. Now, according to the new draft, a vehicle model's overall safety star rating is proposed to be determined by its performance across 5 key assessment parameters, including crash protection, vulnerable road user protection, safe driving technologies, accident avoidance, and post-crash safety as well. So yes, these are all the assessment factors that companies need to keep in mind as far as the testing rules are concerned.
All right, but moving on to another news flow, and the US court has held Byju's Ravindran personally liable for paying back more than $1 billion after Byju's Alpha and US lender GLAS Trust Company LLC sought repayment through a petition. Anurag Joshi joining us with more details. Anurag.
A U.S. court for bankruptcy in Delaware has ordered Byju Ravindran to pay over $1 billion. The court for Delaware granted motion for default judgment against Byju Ravindran for an amount of $541 million. The U.S. federal court had ordered Byju Ravindran to pay back more than $500 million. It was $533 million, which the court said that Beju's brother, Riju Ravindran, had transferred to a fund called Camshaft. The US court had earlier said that the amount of $533 million was transferred by Riju Ravindran out of a $1.2 billion Term B loan. Beju also owes the court hundreds of thousands of dollars in fees for being in contempt, the ruling said. The order to show cause required Ravindran to appear in person or virtually, and the court determined that it has personal jurisdiction over Ravindran. On July 7, the court had ordered Ravindran to immediately comply with the discovery orders holding Ravindran in contempt. And the lawyer for Ravindran said that the court judgment and related orders will be appealed promptly by Baiju Ravindran.
All right, so that's the latest on Byju's. But on that note, we'll take a very short break. Lots more coming up on the other side.
Let the thrill begin.
The all-new Hyundai Venue. Bookings open.
Labour courts introduced reforms benefiting gig and platform workers, MSMEs and women employees. Let me take it across to my colleague Sameer Dikshit, who joins in with more details. Sameer.
The centre has officially implemented the 4 new labour codes which come into effect from 21st of November 2025, and the new 4 labour codes will replace the 29 existing labour norms. Now, this particular labour code was passed by the Parliament in year 2020, and after 5 years it has now been officially rolled out or implemented. Now, Prime Minister Modi has also hailed this landmark reform for the labour segment and has mentioned that this is going to be one of the biggest reforms since independence, aiming to modernize as well as to bring much more transparency in the labour governance. When it comes to the 4 labour code, it includes Code on Wages 2019, the second one is Industrial Relations Code 2020, the third is Code on Social Security 2020, and the fourth one is Occupational Safety, Health and Working Condition Code 2020. So these are the 4 codes which will come into effect. When it comes to that, what key significant changes it will bring to the worker side. So first one is that it will provide universal social security, especially to the gig workers. For example, the PF, EAS, IC, the insurance, these sort of social security will be provided, and it will cover all the laborers, especially the gig workers. In addition to this, the aggregators, they must now have to contribute 1 to 2% of their fund as a welfare fund, which will help the laborers. In addition to this, mandatory appointment letter has to be given to the labor, and that will be, this is not a choice but a mandatory clause that will come into effect, and this will help to ensure the transparency. Minimum wages for all, especially for women. The minimum wage criteria will be fixed, and it will be equivalent for both men and women labor as well. Timely wages is another important aspect. So wages, the dispersal has to be done timely, and it will be equal for all the segment. Health benefits, for example, free annual health checkup, which is going to be mandatory for the workers above the age of 40. So that sort of social security and the health benefit, it is being aimed to provide to the workers. Now, for the employers or for the industry side, they have to reduce the compliance for the workers. They have to be more transparent. Whatever the norms are being included, it has to be conveyed to them and apprised to the government as well. The dispute resolution mechanism has to be made more robust, and it should be much more transparent as well. Fixed term employees are now entitled to the same benefits as a permanent staff. Whatever benefit it is being given to the permanent staff, the same has to be given to the fixed term employees as well. Now, this particular labor reform is aimed to bring much more benefit to the gig economy, to the gig workers, also to the MSME sector and to the contractual labor. And government understands that this will be hailed as one of the biggest reforms since independence and will help to boost the country's economy as well.
All right, thank you, Sameer, for taking us through all the details. Some of the biggest workforce reforms have come into play, and to understand how smooth the transition is going to be, we are now joined by Atul Gupta, partner labour and employment practice at Trilegal. Hi, Mr. Gupta. Thank you so much for joining us this morning. Very good morning. And, firstly, tell us how exactly are these rules going to impact gig workers? How smooth is this transition going to be? And also, any old labor law provisions that are still going to be at play until states notify these rules? So is there going to be an issue of dual compliance? Could that something be that we're going to look at?
Hi, good morning, Kanesh. Yes, there's certainly going to be a fair bit of complexity and ambiguity in the coming few months because what has been notified are only the central laws and the accompanying state rules that can sometimes, not always, be necessary for the effective implementation of these rules. And these central laws have not yet been enacted by the state governments. So what's going to effectively happen is that all the old laws have been repealed. They have to be complied with, the new laws, the IR code, SS code, etc. But they potentially have to be read in conjunction with the old rules under the repealed laws until the time that the state governments can come out with new rules. So the coming few weeks and months, until the time that the rules are actually implemented, which could have to go through a fresh consultative process, is going to create a situation of fair bit of uncertainty for organizations in terms of how do they comply with the letter of the new codes. In connection with your question on gig workers, pending the implementation of the central codes, a lot of state governments like Rajasthan, Bihar, Karnataka, they have taken the initiative to create their own state level welfare legislations for gig workers, right? So there is certainly going to be a potential of dual compliance, which is a problem that a lot of the industry has continued to face because labor law is a concurrent subject in the constitution. So there is now going to be a potential of dual compliance where organizations will need to comply with the state level gig worker rules, as well as and when the welfare schemes under the central codes are enacted, need to comply with those as well. The state rules actually go a little above and beyond what the central codes say in terms of the protections given to gig workers. And the state governments are also creating their own state level welfare boards with contributions that are meant to be made to those. So I am hoping that in the coming few months, there's going to be further clarity emanating from both the central and the state governments, which will help make matters a little bit more clear and straightforward for the industry in terms of how they should comply. But the reality is that the old laws have now been repealed. So if tomorrow you've got an exiting employee and they need to be paid their gratuity, or if you are an industry which is trying to restructure, you will need to take into account the provisions of the new codes.
Morning, Mr. Gupta. This is Shrishti also joining in. So definitely gig workers will be impacted. But along with that, in the new labor codes, we also see that the government is guaranteeing free annual health checkup for 40 plus workers in that age bracket, and along with that 100% health security in some of the people who work in the hazardous sectors. At this point in time, Mr. Gupta, what is your view on the new rules complying with the international standards, and will the government agencies will solely be responsible to get all these mandates into work, or do you believe that the private participation is also something that the government will foresee to get these new laws into force?
So I think the onus really lies on the government to create the subordinate or delegated legislation, as it's known, right, for the operationalization of these rules. As is normally the case in these kinds of significant legislative developments, this is often done through the consultative process. So the industry does have a very active role to play in helping shape up what the ultimate rules look like, right? And what they believe is going to be a well-balanced and thought-out rule structure within which they can operate. Now, not that this hasn't happened. These codes have been in the making for many years. The text of these codes has been passed many years ago. There have been many dialogues between trade unions, the government, and the industry. But not all the requests or expectations of the industry have necessarily been taken into account, right? So we're going to have to wait to see what the final form of the various rules look like. A lot of it is still in the works. The delegated legislation is not necessarily out yet. So there remains a certain degree of uncertainty as to how these will ultimately operationalize.
Got it. Mr. Gupta, about the point that you were making about restructuring of salaries, just wanted to understand, of course, this is the great move for further formalization of workforce, but the already current formal workforce, any kind of restructuring that we could see for them in their salaries, at the end of this month probably. And of course, the rule is that by the 7th of the next month, the salaries should be in. So do you think the take-home pay is going to be different slightly on the back of these 50% wages rule, gratuity? So the new rules that have come in, could that change the structure of the current salary? Could take-home pay change for the current employees who are in the formal workforce?
So there are a lot of misconceptions, unfortunately, around what the new rules imply, right? One of the common misconceptions is that everyone's basic salary has to change to 50%. That's actually not the case, at least as per my reading of the new definition of wages. What the government is essentially doing is trying to address practices where the basic salary used to be, in many organizations, a very small percentage of the gross income. And then they would calculate certain benefits, either social security contributions or end of service payments, on that smaller component of basic salary. What the government has essentially done in the new definition is to say that if your covered components of wages are less than 50% of the gross, then we will deem the wages on which various benefits have to be calculated to be at least 50%, right? So it's basically a measure to build in a certain degree of certainty and to avoid various exit payments and benefits to be calculated on a very small portion of the gross income, correct? Now, in terms of what this is going to do as an impact on take home, I don't necessarily see any immediate impact, right? Because contributions and deductions on salaries, which are typically for things like Provident Fund, is not changing. The PF code has not yet been repealed, right?
Yeah.
But organizations will also see a potential impact on how they calculate some of these benefits going forward.
Sure.
Gratuity today is calculated on the basic salary. Tomorrow it's on the new definition of wages. So they are going to try and look at restructuring their wages.
All right, we'll watch out for that. And thank you so much, Mr. Gupta, for taking the time out this morning and speaking with us and helping us understand a bit more about the new labor laws. But meanwhile, the gig workers will also get recognized for the first time as the centre rolls out the new labor laws for them. Let me take it across to my colleague Snehi, who joins in to tell us the list of new laws and how will it impact the financials of the platform companies. Snehi.
Well, yes. So let's first understand what the news is. Online food delivery, e-commerce and quick commerce companies like your Amazon, Flipkart, Swiggy, Zepto, Zomato, they will now have to pay for the social benefits of India's 1 million and more gig and platform workers. So first, understanding some numbers, the gig worker economy right now is at 10 million gig workers, which is projected to grow to 23.5 million by 2029 to 2030. This is according to the Press Information Bureau. So the new labor code, let's understand what that is. Gig work, platform work and aggregators have been defined clearly for the first time under this labor code, which was not there earlier. Aggregators must now contribute 1 to 2% of their annual turnover, capped at 5% of the amount paid or payable to gig and platform workers in terms of social security and other benefits. Now remember, this was never specified in the previous law, so that is a big update coming in terms of what this new labor code has in store for gig workers. Aadhaar linked universal account number will make welfare benefits easy to access for these gig workers, fully portable and available across trade regardless of any migration that happens internally. So now what this means is gig and platform workers will be formally recognized under the law for the first time, and this includes everybody like delivery agents, ride hailing agents, service platform staff, freelancers and others as well. Under Code on Social Security 2020, all workers, including gig and platform workers, will get Social Security coverage. They will also be getting PF, ESIC and insurance, and aggregators must contribute a dedicated fund with financial insurance, health protection, disability support and old age support as well, none of which was specified or existed in the previous law. So in terms of this is obviously going to affect the top line of the companies between 1 and 5% to the extent that they allot a separate fund for the social security benefits for their gig workers. So far, we've had corporate reactions from Eternal, wherein they are welcoming this move and they're saying they're deeply committed to adhering to the government's move. Flipkart Group, you have the Chief Corporate Affairs Officer who says that these new labor laws, they provide a more comprehensive and predictable framework going ahead. Amazon spokesperson said that while they welcome this implementation of the government rules, they will also have to see how this impacts their financials. So that's a cautionary statement from Amazon. And lastly, Uber spokesperson says that Uber has welcomed this government's move to implement the new labor codes, and they're looking forward to working with the government as well. So that's the take on the gig worker economy. What was not there earlier, what is now included in terms of health insurance, social security benefits, minimum wage, and a lot of other benefits that the new labor code has now specified for them.
Big reforms coming in play for the gig economy especially. But on that note, we'll slip into a very short break. Be right back with more on the other side.
Well, that's the holiday of it.
Creative destruction. So it's really a question. It's interesting. A few years back, we thought that they were actually going to benefit, and now we actually see that AI may be a competitor to them. And I don't know how that's going to play out.
Came out of an incredibly strong earnings season. You saw NVIDIA's earnings results last night. Very, very strong. It shows that we're not in an AI bubble, but I think there's just a lot of cross currents and noise moving through markets that are leading to this risk-off kind of self-fulfilling market narrative for right now.
Not necessarily. It's hard to say with a lot of conviction, just because the fundamentals are so strong. And really the arguments against that trade continuing is it's getting a little bit rich, it's getting a little overextended, but the fundamentals that is driving that shift.
So we are appropriately nervous about the rally. There is a whiff of euphoria, which is always a little bit unsettling. And clearly the concentration where you've got so few companies dominating the index.
New kid on the block, and there are people, there's a lot of excitement. But if Mr. Bill Gates and a lot of people have spoken about the bubble in it, there are a lot of people who are cautious and thinking about it. They have just given expression, but they represent a whole lot of people who are more cautious because they've seen internet. They've seen global financial crisis.
Our perspective, what we are recommending investors is there's no obvious AI play in India at this stage, where, okay, AI boom, but what will happen is two things. One is we'll have to watch how IT services companies in India adapt to that in terms of applications. We haven't seen any material disruption yet, or not the extreme fears being talked about play out. And second part is even the rest of the businesses, like which are the banks which adopt AI faster.
Which company in the whole world, if you think from application level and go back, has a real AI business model? It is only Google. Google has a real AI business model. Work down from there and say, okay, Google has relationship with Reliance Jio. Maybe Reliance Jio is an AI player.
All right, so that's the expert view on AI valuations, but let's shift focus to digital payments now. Now, RBI has issued statement on UPI, India's popular mobile payment system. UPI will now be interlinked with European Real-Time Instant Payment System, that is TIPS, which is Target Instant Payments Settlement. My colleague Anurag Joshi is here with all the details.
The Reserve Bank of India and the European Central Bank have began the preparations to link UPI with Europe's payment system, TIPS. TIPS is the Target Instant Payment System, and it's Eurozone's real-time instant payment system. Now the move will allow UPI and TIPS interlinking to enable cross-border remittances between India and the Eurozone. And the move aligns with the G20 roadmap to make remittances cheaper, faster, and more transparent. RBI and NIPL have engaged with the European Central Bank to operationalize the UPI and TIPS link, and the technical integration and risk management and settlement arrangements are currently underway. The proposed link is expected to benefit users from both the jurisdiction, which is India, and also the Eurozone area. The UPI push strengthens India's global payment connectivity strategy and also aligns with the India, Middle East and EU strategy, which was propounded during the summit of G20 in New Delhi in 2023.
All right, thank you so much for getting us all those details. And in a stern message to Pakistan, Defence Minister Rajnath Singh on Sunday said that Sindh, which was part of undivided India before 1947 and went to Pakistan after that, may return to India again. His remarks comes at a time when relations between the two countries are tense following Operation Sindoor in May.
Moving on, Justice Suryakant will be sworn in as the 53rd Chief Justice of India today, succeeding Justice B.R. Gavai, who retired last evening. Justice Suryakant will serve a tenure of nearly 15 months and will demit office by 2027.
And India clinched the Blind Women's T20 World Cup 2025 title after defeating Nepal in a thrilling final. The Indian team showcased outstanding skills and resilience, emerging victorious in the highly anticipated match. Now, the win marks a significant achievement for Indian women's blind cricket, solidifying their dominance on the international stage. Now, this adds another prestigious title to India's growing list of accomplishments in blind cricket.
All right, so those were some of the top national stories that we are tracking this morning. But with that, we're completely timed out on this edition of Market Cafe. Srishti and I will take your leave, but don't go anywhere. The market will take all the action forward.
Well, that's the holiday of it.